Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. The annual inflation rate in the US rose to 2.9% in December 2024, up from 2.7% in November, in line with market expectations. On a monthly basis, the Consumer Price Index increased by 0.4%, the highest since March and above the forecasts of 0.3%. Retail sales in the U.S. increased 0.4% month-on-month in December 2024, the least in 4 months, compared to 0.8% rise in November and below forecasts of 0.6%. Before his inauguration, U.S. President-elect Donald Trump had a phone call with China's President Xi Jinping, during which he stated that both parties would do everything possible to make the world more peaceful and safe. Donald Trump's inauguration is scheduled to take place on January 20, 2025. More clarity on Trump's trade policy is expected after the inauguration. China Zone. The Chinese economy expanded by 5.4% year-on-year in Q4 2024, accelerating from 4.6% in Q3 and exceeding market expectations of 5%. This marks the strongest annual growth rate in 1.5 years, driven by a series of stimulus measures introduced since September. Indonesia Zone. The balance of trade in December recorded surplus $2.24 billion, a smaller surplus compared to surplus $4.37 billion in the previous month. The reduced surplus in December was driven by higher import activity, which grew by 11.07% year-on-year, while export grew by only 4.78% year-on-year. Bank Indonesia unexpectedly cut its benchmark interest rate by 25 basis points to 5.75% during its January meeting. The central bank's decision underscores its dual mandate of maintaining stability while supporting growth as Indonesia navigates global economic uncertainties and domestic recovery efforts. Loan growth in December 24 grew by 10.39% year-on-year, the slowest pace in 13 months following 10.79% year-on-year growth in November. The growth of money supply M2 for December is expected to be released this week. In November, it still grew by 7% year-on-year. Market view. The Jakarta Composite Index increased by 0.93% week-on-week to 7,154.66. The JCI is expected to enter positive territory this week, as Bank Indonesia's decision to cut rate has contributed to a drop in the yield of SRBI, which may reduce banks' cost of fund in 2H25. Following Donald Trump's inauguration, the market is anticipated to gain more clarity on U.S. trade policy. During Trump's first term, the dollar index declined after his inauguration. A similar trend is expected for Trump's second term. Foreign investors recorded a net buy of 247.72 billion Indonesian rupiah over the past week, bringing the year-to-date outflow to 2.69 trillion Indonesian rupiah. The three sectors with the greatest returns were properties and real estate, energy and technology, which increased by 5.02%, 3.03%, and 2.29% respectively on a weekly basis. On January 17, 2025, the yield on the 5-year benchmark government bond FR0104 decreased to 6.88%. The yield on the 10-year benchmark FR0103 flattened to 7.10%. Similarly, the yield on the 15-year benchmark FR0098 remained flat at 7.27%, while the yield on the 20-year benchmark FR0097 also stayed flat at 7.27%. The yield on the 10-year Indon bond Indon 34 declined to 5.46%, while the 10-year U.S. Treasury yield decreased to 4.63%, compared to their levels on January 10, 2025, which were 5.52% and 4.76% respectively. Indonesia's risk premium, as reflected by the 5-year CDS, decreased to 77.51 basis points. Meanwhile, the rupiah weakened by minus 1.16% week-on-week, closing at 16,380 Indonesian rupiah. As of January 16, 2025, foreign ownership in the government bond market was recorded at 876.05 trillion Indonesian rupiah, 14.43% of the total outstanding, a decrease from its level on January 10, 2025, which stood at 879.43 trillion Indonesian rupiah, 14.50% of the total outstanding. The Fed is expected to cut interest rates twice, totaling 50 basis points in 2025, lowering the benchmark interest rate by a total of 100 basis points year-to-date. The U.S. economy remains on track for a soft landing, with growth projected at 2.5% year-on-year in 2024 and 2.1% year-on-year in 2025. Similarly, Bank Indonesia is expected to implement an expansionary monetary policy in 2024, which is anticipated to positively impact Indonesia's economic growth. The bond market is likely to respond positively initially, driven by improving macroeconomic conditions, followed by a strong performance in the JCI. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.